Hello traders, Gary Wagner here. It is approximately 7:30 a.m. in Honolulu, Hawaii, Thursday the 18th day of August, and this is the daily report for gold. We have gold trading just off of its new record contract highs. In fact, it traded to a high, I believe, of $18.29, up about $35 on the day, and that's basis December COMEX gold and Globex gold. Currently trading, this is the cash market, 18.19 in that area, and you can see it is just right off of those highs. We had incredible fundamental news that broke the market today. We had a basic meltdown in Europe with their equities markets. We also had a lot of weak U.S. economic data, and these things together were part of the driving force propelling gold to a new record high. Traders, this is getting quite interesting. I want to start with just our Henkin trend and looking at the 720-minute chart. Each candle represents about a half day in trading, and as you can see, this of course is this last spike up and this record high. But if you look at the relative body size of these prior candles, they are strong in that they lack any kind of a lower wick. But as you can see, it started out with our classic doji, our pivot point right in here. And from that doji, we did get a pretty strong breakout. You can see sizable candle, but if you take a look in terms of the size, they have been slowly diminishing, meaning that that trend was beginning to weaken. Still green, but beginning to weaken. That all changed today, and as you can see, this large green candle is absolutely significant of what we're looking at. We have absolutely breached the old record high and are just trading currently above it at 1619. In fact, the best way to take a look at that, of course, is to basically remove our Henkin chart, and you can see it much more readily. This is a absolute and utter breakout to the upside. So traders, the big question that has to be on all of our minds is this market out of steam? Where is it going to go? And what kind of projections are we looking at currently? You know that I have had certain benchmarks, and as we have taken them out, I have gone and recalculated to look for the next benchmark. We've had some critical ones. 1780 was one. Then we had that band at 1803, 1809. You can see that band right here. Here's the 1809, 1810. And in fact, when we take a very, very short term Fibonacci retracement from just this last move right in here, very, very short term, actually the 23% pullback that we saw, which is when it hit its record high and pulled back, was actually to 23%. But you can see we have what I call a band or Fibonacci harmonics. Here's my sentiment, traders. If we see this old record top and basis cash, that's 1813, December COMEX 1817, that was absolutely resistance. My sentiment is, in this kind of a market, once the market went and surpassed it and traded above it, and the strength that it has had on a tentative basis, I would not be at all surprised if this actually now becomes support, and we could either take off and move higher from here, or we could form a base and trade a little bit sideways from here. But I will tell you this, I am not convinced that this market is out of steam at this point. This is our fifth wave of a fifth wave. It could be very dynamic. So my targets, I think most achievable is going to be 1862. 1862, as you can see, is a calculation that I did today, basic extension. It's also the target we have been looking at for quite some time. As far as taking out these next pivot points, they are the logical sequence within the Fibonacci retracement, which would be 76% here. But traders, well before we get to there, we're at 1820. I believe we still have a high probability to hit this initial target of 1862. And traders, I want to leave you with this chart. This, of course, is the chart that I look at. It's our big picture. Why? We're looking at this entire run from October of 2008 all the way to present. For the better part of that run, probably 90% of that run, as you can see, it traded very eloquently right within this channel, doubling every 3 years, approximately. The interesting thing is this last attempt, it barreled right through that channel line and traded to new highs. Now, this channel line is simply derived from that top or that high. And as you can see, it is now approaching a double top, but it has exceeded that. And that, traders, is one of the most bullish markets that I have possibly ever seen. Traders, the MACD is absolutely off the wall. I've never seen a MACD quite like this. Traders, these are unusual times. I'm glad we've all been together for this ride. This has been Gary Wagner, wishing you, as always, good trading. And traders, we're living that wish today. We'll talk to you tomorrow for the weekend wrap-up. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange